Hey there, welcome back to my channel. It has been some time since I last uploaded my video, I'm back again. I'm going to upload new videos just for you to help you to become a trader, an investor, make money from this side hustle, right? Beyond your job, right? You want some extra income stream coming in your way. So I'm going to do a lot more of these trading videos, a lot more about investing, trading strategies and things like that to help you to become profitable, right? Trading and investing in the stock market. So today I'm going to talk about how to become a profitable trader. So my name is Richmond and I run this channel for a while now. And if you have not subscribed to my channel, make sure you click on that subscribe button below so that you don't miss out any of my upcoming new videos for you. So before we go deep into what makes a trader and investor profitable, let's go through a simple example first. So here is this guy, right, who is a better trader, right? This guy over here, his name is Mike. So he trades the stock market every day. He's a trading enthusiast. He likes to, buy and sell, and make money from the market every day. So he uses very powerful day trading strategies where he look at, the candlesticks, the hourly candlesticks, the minutes, the 1 minute, the 5 minute kind of candlesticks, right? And buy and sell accordingly to make money, or even like short those candles, short the stocks in order to make money, right? So he wins 90% of the time. So he has very powerful day trading strategies. He wins 9 out of 10 times whenever he trades, right? So he makes around like $10 per winning trade. Right? He didn't have a very big account. He just have a small account. He makes $10 for every winning trade that he closes, right? But he loses $100 for each losing trade. So 1 out of 10, right? He may lose $100, or maybe it's just 90% of that. It didn't really happen that frequent, right? So whenever he lose a trade, he is losing $100, right? So this is Mike. So how about the other trader, right? This guy, his name is Gilbert. He trades the stock market a few days a week. So unlike Mike, right, he only trades like 2 to 3 days, or even sometimes once a week, kind of thing, right? And he uses very simple trend following strategies, right? Meaning that when he sees the stock is moving up, you want to ride the trend up, right? Buy and ride the trend up, right? So that is very simple trend following strategies. If the stock is coming down, you just short the stock coming down, right? So that is how he makes money. So, but he only wins 50% of the time because sometimes he get whipsawed. Sometimes the volatility put it out of the trade very quickly. So he didn't win as many times as Mike does, right? But he wins 50% of the time. But here's the thing, he makes $200 per winning trade, right? And he loses $100 per losing trade, right? So whenever he got whipsawed out, he is stop loss, he was out, he loses around like $100. But when he wins $200, and he wins 50% of the time. That means 5 out of 10 times he is making money. So looking at this, who is actually a better trader? Right? A good way to really gauge who is a better trader is to look at their trading strategy over a longer period of time with a number of trades, right? So out of 100 trades we look at, so we now want to compare Mike with Gilbert. Mike wins 90 trades, right, out of 100 trades, loses 10 trades. So his profit will be 90 trades times the profit, $10 per trade. He's getting $900, right? For loss, he has 10 losses in the 100 trades, and whenever he loses, right, he actually lost $100. So 900 minus $1,000 of loss, right? Net profit, he is actually losing money, right? He is losing $100 after 100 trades. So he didn't really make money, although his win rate is very, very high, right? How about Gilbert? He wins 50 trades, right? And he loses 50 trades. He only wins 50% of the time. So his profit is $50 times $200. He makes $10,000. His losses, 50 losses, $100 loss for every losing trade. He actually lost $5,000. So net profit, he actually makes $5,000. So despite that he is only winning 50% of the time, he is losing 5 out of 10 trades, he is still making money. So who has the better trading strategy? Obviously, it's Gilbert, right? Out of 100 trade, he actually makes $5,000. So as you can see, to become a profitable in trading, it is a lot more than just about winning rates. So sometimes you see people, they say they win 9 or 10 times, or they say they win 8 or 10 times. But when the thing is that didn't really matter. That's only part of the equation. So the thing is how much they make, right? How much you make when you are right and how much you lose when you're wrong. Right? Those guys who say, they make 90% of the time, 80% of the time, but if his losses is like 2 times, 5 times of what he's earning, right? Then overall, over a longer period of time, he is not making money, right? That you have to be careful. It's not just about winning rate. So what really matter is what we call positive expectancy, right? So it means the total profit minus the total losses over the number of trades. So we want to see like the average P&L, right? The average profit and loss per trade. So for Gilbert's case, right? Gilbert has a win rate of 50%, but he makes $200 and loses $100, right? So his net profit $5,000 over 100 trades. He is actually making $50 per trade, and that is what we call positive expectancy. So you know that every trade you make, right, every trade you take, right, you are roughly going to make $50 per trade, right? Despite whether it's a winning trade or a losing trade over a long time, right? Whenever you click the buy button, right, you are making $50. That is what it really means, right? It's positive expectancy. For Mike's case, right, his expectancy is negative $1, right? He's losing money whenever he trade. So every trade he's made, although he's winning, right, 9 out of 10, he is actually losing money every trade. He's losing $1 whenever he click on the buy button, right? So that is not ideal. So to become trade profitable in trading, right, you have to have a proven positive expectancy trading strategy, right? This you can do a lot of back testing, a lot of testing, to fine tune your strategy to make sure that you have positive trading strategy, right? So that it works in your favor over a longer period of time and over a large number of trades. So a proven trading strategy will always make money on the long run, right? So don't just look at 5 trades or 10 trades. You might have, more losses than wins. But if you look through months and months of trading or even years of trading, you'll see that you are actually making money because this trading strategy has an edge over the market and has proven that, you can make money and that edge actually works in your favor. So that is the critical piece of it, right? So expect losing streaks, right? So although you may have like 50% or even 70% win rates, right, you can expect to see a string of losses, right, time to time. It's inevitable, but you'll see like 5 losing streak, 7 losing streaks, right? Those are actually very random, right? It's a very random small sample size, right, which can happen. So it doesn't mean that your trading strategy no longer works. But if you have positive expectancy and you have tested it over a long period of time with large number of trades, you are very confident. Those are just expected. You will be expecting a lot of losing streaks. But at the same time, you will have winning streaks. Right? So you will have 7 to 10, right? 7 to 10 winning trades in consecutive, right? And that is going to rake you in a lot of profits because you are making a lot more than what you lose, right? So always keep your losses small and always let your profit runs. So you don't want to lose as much, right? You want to cut your losses fast. You want to have a strategy that you after you hit your stop loss, immediately you get out. But if the stock actually moves in your favor, you want to let it run and let the profit generates and you only take profit at certain levels, right? Not immediately, right? We need to maintain a healthy risk to reward ratio. So what really is a healthy and ideal risk to reward ratio, right? it will be around like 1:2, meaning that you risk $1 to make $2. You're risking $100 to make $200, just like Gilbert, right? Gilbert risked $100 to make $200, right? The minimum I think you can do, I think for myself, for my experience, right? The minimum you can do is $1 to $1.50, right? So $1.50 is the minimum risk to reward you should be targeting. That is uh probably a lot more healthier, and also condition how your mind and your psychology actually works. So ideally for myself, I follow very strictly 1:2, like $1 to make $2. That's for myself, right? And of course, you need to stick to your trading strategy. You need to follow the rules. You don't let your emotions affect how you trade. You don't want to be, you know, on very greedy when you have a lot of winning trade. You start to take some of these low quality trade that didn't follow your rules, right? Or you cut losses, or you take profit too fast, right? Your wins become small, and your losses become bigger, and that is not ideal, right? So we have to be careful with this as well. So how can we actually see this in action, right? So I have developed a Google Sheet there for you to play out with. So you can click on the link below. You can run the trade simulator and see how it actually works, right? So I will go through with you right now. So let me pull up the trade simulator over here. So as you can see over here, let's say that your capital is now $100, okay? And you are risking like 2% per trade. So meaning that you are losing probably like $200 per trade, right? So when and your win rate is 50%, just like Gilbert, right? So and your win multiplier, this your risk to reward ratio, you want to win two times of your risk per trade, which is 4%, right? Two times the multiplier, two times the 2%, right, is 4%. And when you lose, right, you lose the 2%, which is like $200. So that is how we have been looking at, right? So of course we can switch this around. Like sometimes people reach three, but for myself I reach two. And as you can see over here, so once we have a 50% win rate, and we have a risk to reward ratio of 2:1, you can see that after 100 trades, right, you actually um double, right? Almost double, right? Almost even, or it's not even double, it's like triple, right? You're making 191% increase in profit, right? That is what you gain. Where your actual win rate, because it's random, is not always 50%. Sometimes you win more, sometimes you win less. $50 per trade. 50% win rate, right? And expectancy, you are making $191 per trade, right? Meaning that whenever you click on the buy button, you're making $191. So that is what it looks like, right? So you can see from the result below, right? These are the actual results. So you can see that sometimes you have uh wins and losses, then you see a string of wins, then you see losses again, and you see multiples of these losing streaks, right? And during this period can be really tough if you are not trained psychologically on how trading should work, right? So sometimes you will see this whole string of losing trade, and you say, "Oh no, this trading strategy no longer work for me," right? That's where people lose faith. People will start to act irrationally, and they lose money eventually, right? They really just bust their account. But you see, even with so many losses, you are actually making 191%, right? Of course, you want to have losing streaks, you can expect winning streaks, right? Sometimes you see all these winning streaks over here. And you see, actually, the losses come in streaks, and that is very tough if you are not trained, right? And especially when money is involved, that is really very difficult, right? So over the years, I have conditioned myself to remove the emotional part of me out from the trading, right? Whenever I trade, I try to be very neutral, very not emotional, right? So you can see that is how it works, right? 191% with just 2% per trade, 50% win rate. So what if we have lower win rates, right? So let's say we have maybe 40%. You are not very confident, and you made some mistakes. You didn't your trading strategy is not fine-tuned in a way. So you say 40%. So you can see even with 40% win rate, and risk to reward as 2 to 1, you see that the total increase is 51.6%. You are still making money, although you lose a lot more times than you win, right? So, and you are expected to win $50 per trade. See, that's the power of the positive expectancy, right? Because your win multiplier is a lot higher. So let's say you have a win rate of 80%, right? Of course, this is very, very high already, right? 1,700%, right? Because of, but then if you have a very low risk to reward ratio, let's say you are only risk 1:1, right? You may still make money, but then if you have even lower, you have more losses, right? So you have inverse, right? You have a lot more um I, I'm not sure if is it working, right? Right, so we can reduce this to zero point 0.5, right? And you actually uh maybe 50%, you see you're actually losing money in this case, right? 50% win rate because your win is smaller, right? And your loss is a lot larger. You have negative, right? You're actually losing money in the long run. So that is not ideal, right? So which is why the win multiplier and the lose multiplier is important. Your risk to reward ratio, it is very important, right? It really works together with your win rate and determines how much you're going to make in the long run. So that is how it works, right? So this spreadsheet I will open up to you. Click on the link below to access this spreadsheet so you can play with it. I don't think you can do negative too because it's always set to one for this case, right? I only program it to set to one, but you can definitely play with it, see how all these numbers will work, right? And I will see you in the next video. We'll go through a lot more about trading strategies. We'll talk about how you manage money, how do you uh, allocate your funds and things like that, right? Because I believe trading and investing, they are not just money making strategies, right? It is part of the overall framework of how you manage your wealth. So I'm also going to talk about, how are you going to allocate your funds to make sure that you have a healthy framework in place so that you generate wealth, accumulate wealth over time. So a lot more videos to come. So make sure you click on the subscribe button below. And I will see you soon in the next video. Right? Enjoy the stock market, trade with caution, always be never let your emotions take over how you trade. So I will see you soon in the next video.